Did you know that you're probably overpaying in taxes in your reselling business just like we did for years? Well, today we're sharing our story how we switched from being a sole proprietor into an LLC taxed as an S-Corp. And many people think that switching from a sole proprietorship to a single member LLC is where the tax savings are generally, but they're wrong. It's actually only when you switch from being taxed as a disregarded entity, that is either a sole proprietorship or LLC, into being taxed as an S-Corp where you can significantly realize tax savings under the right circumstances. Hey resellers, welcome to Pro Reseller Academy, where we focus on sharing effective systems that help you grow your reselling business. My name is Evan, and before we start, let me know a few quick disclaimers. I am not a licensed business advisor or tax expert, and the information and opinions I'm sharing today are based on my own experiences in the United States, specifically California. To make informed decisions about your guys' reselling business, you need to consult with a qualified professional who can really provide that tailored advice for your unique situation. Make sure you guys stick until the very end because we have a bonus gift that's going to help you even further assist your reselling journey. So in our previous video, we shared both what a sole proprietorship is as well as an LLC. So now let's talk about our journey from becoming a sole proprietor into an LLC taxed as an S-Corp. As online resellers who operated a sole proprietorship, we were really familiar with how all of our business income passed through onto our personal tax return to be reported for taxes. We would get a 1099-K from Poshmark or Mercari, maybe you're familiar, and simply put it onto our personal taxes, among other things, of course. It was pretty simple, but there was a catch. This meant that we had to pay all of the self-employment taxes, or 15.3% on 100% of our profits. But then we heard about the option to set up an LLC that could be taxed as an S-Corp. The problem? You can't be taxed as an S-Corporation when you're a sole proprietor. You have to first form something like an LLC. Why is that important? Well, we'll get to it in a second. So where most people, including myself when I first started, fail to understand is that taxes are usually split between employer and employee. This in total is approximately 15.3%, which is called FICA taxes. FICA stands for Federal Insurance Contributions Act and currently contributes approximately 12.4% to Social Security and 2.9% to Medicare. This means that employees and employers split that burden 7.65% each. And where people get caught off guard is that they say, oh, well, I can become self-employed and it'll be a piece of cake. Now, it's not that it can't be easy, but it's that when they finally get around to paying taxes, they don't realize that they are now responsible for paying the entire 15.3% FICA tax, not just the 7.65%, and that throws them off. Not only have they not budgeted properly for the taxes they need to pay, but they've also significantly decreased their expected earnings. So how and why is any of this relevant? Because as a single member LLC, you are still taxed the exact same way as a sole proprietorship with that whopping 15.3% tax. However, by crafting an LLC that has been elected to be taxed as an S corporation, you can go back to that employer-employee split and only pay half on your personal tax return in the form of a W-2. When you elect to be taxed as an S-Corp, it doesn't mean you're no longer an LLC. It just means that your tax status has changed. You still get all the perks of a limited liability. Because your business has to pay you for your work as a necessary business expense, payroll can be deducted on the business side as a necessary cost incurred by operating a trade or business. Do you guys understand what this means? Like the video if you do. If not, let me go ahead and break it down further. This is the way that it was described to us. Again, assuming that there is no other factors like deductions or complicating circumstances, if you earn $100,000 in business profits and operate as a self-employed individual who owns an LLC taxed as an S corporation, you can potentially save money. Our tax professionals recommended that we take at least 30% of our profits as a W-2 salary, as long as it was considered a reasonable salary for our job, which is like a regular paycheck. The rest can be taken as distributions. Distributions are like shares of the profits that you as a business owner receive. So by taking 30% or $30,000 in a W-2 and 70% or $70,000 with distributions, you pay FICA taxes on the W-2 salary portion only. For the $30,000 salary, both you and your business pay FICA taxes totaling approximately $4,000. However, you save about $10,000 deferring FICA taxes on the $70,000 in distributions. So when we were used to paying a total of $15,300 out of $100,000 in taxes, we are now saving approximately a total of $6,100. That is in compared to if we paid FICA taxes on the entire $100,000. This strategy allowed us to maximize tax savings while staying compliant with IRS rules. Phew, that was a lot. Stick with me, guys. I want you to note, though, that by deferring FICA tax payments, you decrease your Social Security and Medicare base. And this can impact your retirement benefits later down the line, but it allows you to use the capital in your business now to operate and invest rather than later. And if you guys are getting value out of this video so far, be sure to like it to let us know and hit that subscribe button to get more content like this. Are you guys getting any of this? If not, leave some comments below. I'll try to illustrate it in a different way. Imagine two friends, John and Jane, both running their own reselling business and making approximately $50,000 in profits each year. John operates a sole proprietorship, while Jane, on the other hand, set up her business as an LLC and chose to be elected to be taxed as an S-corporation. Here's the cool part. Obviously, Jane saves more money in taxes compared to John. Why? As a sole proprietor, John has to pay what's called self-employment tax, the FICA tax we just mentioned, on the entire $50,000 he earns. That's 15.3% of his income, which adds up to approximately $7,600. Now, let's look at Jane. Jane has decided to pay herself $25,000 in a salary from her business profits and takes the remaining $25,000 as distributions, kind of like dividends. She still pays taxes on her salary, but doesn't have to pay that self-employment tax on the distributions part. So her FICA taxes, that's the tax for Social Security and Medicare on her salary, come to about $3,800 just because she set up her business slightly differently. So when should you consider switching to an LLC taxed as an S-Corp? We've been told that it begins to make sense to switch from a sole proprietorship or single member LLC around at least $50,000 in profits. This is because at this level, the potential tax savings from reducing self-employment taxes often outweigh the additional administrative costs associated with an S-Corp, like payroll, getting a registered agent, and other paperwork. Just remember that an LLC or limited liability company cannot protect you if you do not separate your personal and business dealings. To see if the switch makes sense for you, you guys need to crunch the numbers. Compare what you're currently paying yourself in self-employment taxes under your current setup, either as sole proprietorship or LLC, with what you could save with an S-Corp structure. Factor in the salary you'd pay yourself and the distributions that you would take. This calculation will give you a clear picture of the potential financial benefits. But unfortunately, getting into this specific calculation is beyond the scope of this video, but there are tons of resources online to help you do so, so check them out. Just remember, this is an overall of what we did, not a tutorial. Everyone's situation is unique and each state has different requirements. So you guys do your research and consult professionals for your specific needs. And that wraps it up. Now, guys, I want to know where you're at in your reselling journey and where you're going. So drop some comments below whether you're deciding on what to do, you're not sure what to do, or you've successfully crafted your LLC tax as an S-Corp. And before you go, if you have found this video helpful, be sure to give it a thumbs up and subscribe to the channel for more tips and strategies on navigating the world of business and reselling. Also, hit that share button to share it to a friend who could benefit. Well, for us, transitioning from a sole proprietorship to an LLC taxed as an S-Corp was a game changer for our online resale business. But now for that bonus that I mentioned in the beginning. Business entities can be confusing and none of it matters unless you can actually make that money. So we want to share the 7S reselling system with you guys. We'll see you in the next video.